When the world falls apart, most people panic. In 2008, millions lost their homes. In 2020, millions lost their jobs. And yet, during those same crises, billionaires quietly doubled their wealth. How do they do it? How do the rich look at the same disaster as everyone else, but see an opportunity instead? Today, I'll take you through the real stories of how the wealthy turned chaos into fortune and how you can use the same playbook to protect and grow your money. Let's go back to the 1930s, the Great Depression. Banks collapsed. Unemployment hit 25%. People lined up for bread. For most families, it was the end of financial security. But not for the Rockefellers. With massive cash reserves, they bought companies and industries at pennies on the dollar. What looked like ruin for others became generational wealth for them. The principle is simple but powerful. Crises don't destroy wealth, they transfer it. The prepared few step in while the majority step back. Fast forward to the year 2000. The dot-com bubble burst. The NASDAQ lost nearly 80% of its value. Hundreds of internet companies vanished overnight. Amazon, then just an online bookstore, dropped from $100 a share to $6. People mocked Jeff Bezos and predicted bankruptcy, but Bezos focused on the long-term vision of e-commerce. He cut costs, built infrastructure, and survived. 2 decades later, Amazon became one of the largest companies in the world, worth over $1 trillion. Those who invested during its darkest days multiplied their money hundreds of times over. When the crowd screams, "It's over," long-term winners are quietly being built. Now let's jump to 2008. The financial system was on fire. Lehman Brothers collapsed. Panic dominated every headline. While most investors ran away, Warren Buffett invested $5 billion into Goldman Sachs and another $3 billion into General Electric. These deals later returned billions in profit. Buffett had cash when others didn't, and that gave him power. But the boldest move came from John Paulson. He bet against the housing bubble while everyone else believed real estate could never fail. When the crash came, he made $20 billion, the single greatest trade in Wall Street history. And then there was Blackstone. While millions of Americans lost their homes, Blackstone quietly bought tens of thousands of houses at bargain prices. Entire neighborhoods that looked broken became billion-dollar rental portfolios. Today, Blackstone is the largest landlord in America. Crises punish the unprepared and reward the bold. It wasn't just billionaires. In cities like Phoenix, Miami, and Las Vegas, families who bought homes in 2009 or 2010 saw their properties double or triple by 2020. Investors who bought the S&P 500 in March 2009 tripled their money within a decade. Even a $10,000 investment turned into over $30,000. You don't need billions to benefit. You just need courage, liquidity, and patience. Another overlooked story, the 1970s. Inflation in America went wild. Gas prices quadrupled. The dollar lost credibility. Most people saw their savings destroyed, but gold owners thrived. Gold climbed from $35 an ounce in 1971 to over $800 by 1980. That's a 20-fold increase. While average families lost purchasing power, gold holders preserved and multiplied theirs. And it wasn't just gold. Oil producers also thrived during the 1973 oil crisis, when energy shortages shocked the world. Countries and investors who owned energy assets saw massive profits, while consumers felt only pain at the pump. In every crisis, there are pain points for the masses, but also profit points for the prepared. Every crisis has its safe havens. The wealthy always identify them early. Now let's move to 2020. The pandemic shut down the world. Markets crashed. Most investors pulled their money out in fear, but those who spotted accelerating trends saw life-changing gains. Zoom exploded from 10 million to over 300 million daily users. Tesla, once doubted, became one of the most valuable companies on Earth as electric vehicles went mainstream. And Bitcoin, it dropped below $5,000 in March 2020. Many declared it dead, but within a year, it soared to nearly $70,000. Those who bought in the panic became millionaires. Crises don't just test the present, they accelerate the future. Here's what almost nobody realizes. Crisis is not only about numbers, it's about psychology. Fear is louder than logic. When markets crash, headlines scream. This time it's different. Social media spreads panic. Friends and neighbors talk only about losses. Most people can't ignore that noise, but the wealthy train themselves to think independently. They know fear creates bargains. They look at data, not drama. And they remember, every panic in history eventually passes. The majority lose money because they chase emotions, not strategy. They buy high because of greed, then sell low because of fear. The wealthy flip that script. They buy when fear is highest and sell when greed blinds everyone else. That single difference separates winners from losers. And psychology isn't just about markets, it's about identity. The rich see themselves as builders of wealth, even in bad times. Average investors see themselves as victims. That mindset difference matters. If you believe a crisis is the end, you freeze. If you believe a crisis is an opening, you act. That shift in mindset alone can change your financial destiny. So, how can you apply this playbook? Even if you're not a millionaire, start by building cash reserves. Aim for 6 months of living expenses. Even saving $100 a month builds your war chest. Without cash, you can't act when opportunities appear. Next, focus on long-term trends. Ask yourself, which industries will shape the next 10 years? Artificial intelligence, renewable energy, biotechnology, digital finance. Read reports from PwC, Deloitte, or McKinsey. Observe daily life. Which apps or technologies are becoming unavoidable? That's your clue. Then control your risk. Ray Dalio diversifies in his all-weather portfolio. Nassim Taleb uses a barbell strategy, most money safe, some in high-risk bets. For you, that could mean mixing real estate, stocks, bonds, maybe digital assets. Balance is protection. And here's the crazy part. This strategy doesn't just work for billionaires, it works for anyone disciplined enough to follow it. Take Sarah, a school teacher in Ohio. In 2020, while markets were crashing, she invested $500 a month into index funds. Her colleagues told her she was crazy. 2 years later, her portfolio had grown far beyond expectations, not because she timed the market, but because she stayed consistent when fear was highest. You don't need Wall Street connections. Discipline and consistency can turn downturns into opportunity. Another example, Mike, a factory worker in Michigan, didn't have much to invest, but he saved $50 a week, even during the worst months of 2020. By consistently buying low-cost ETFs, his small habit turned into a 5-figure portfolio within just a couple of years. For Mike, the lesson was clear. Consistency beats timing. You don't need to be rich to act like the rich. You just need to start. Here's an exercise. Build your own crisis playbook. Step 1. Open a separate savings account just for opportunities. Step 2. Pick one long-term trend to study, maybe AI, green energy, or biotech. Step 3. Decide how much you'll invest regularly, no matter what. When the next crisis hits, you won't be scrambling. You'll already know what to do. And here's a bonus step. Write down your rules before emotions hit. For example, if the market falls 30%, I will buy more, not sell. Having written rules helps you stay calm when fear is everywhere. It's like a pilot's checklist in turbulence. It keeps you from making emotional mistakes. Crisis doesn't destroy wealth, it transfers it. The question is, will you be on the losing side or the winning side? So here's my challenge. Don't just watch this video, take action. Write down one step you'll take before the next downturn. Share it in the comments below. Writing it makes it real, and sharing it makes you accountable. And remember, on this channel, we don't just talk money, we teach wealth. If you found value in this video, hit the like button, subscribe, and share it with a friend who needs to hear this message. And here's one last thought. The next crisis will come. Maybe in 2 years, maybe in 5. But when it does, money will once again move from the unprepared to the prepared. The real question is, which side will you be on? If another crisis hit tomorrow, where would you put your money? Real estate, stocks, gold, Bitcoin, or something else? Comment below. I read every response. And here's the bigger question. The rich don't just react to crises, they anticipate them. How do they know when a crisis is coming? And how do they spot the industries that will dominate the next decade? That's exactly what we'll explore in our next videos. Don't miss it.